And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon. Welcome to the market recap. As we say goodbye to January, some exciting things happening in the markets today, as always. The equities apparently are happy about the Bengals going to the Super Bowl. Just kind of going over what happened in the markets today. Excuse me. Crude oil, patience pays, as the best trade comes 2 hours after the open, right at the 3-day balanced low. S&Ps and the NASDAQ, late spike rule. Add a breakout from previous balance and pow. Forgive me. Gold. Lack of clarity provides a really small range, very small opportunities today. The euro, long liquidation takes selling power out of the marketplace. That's not mine, that's Jim Dalton, but it seems to be exactly what happened in the euro today. I do remember suggesting watching the extremes, and watching those extremes created the gap close that was a gap that was left from last week. So certainly some decent upside opportunity in the euro, pretty close to the weekly kickoff low. The 10-year short time frame control basically just spans through Friday's value area, and nothing tremendous there as far as opportunity is concerned. And the NASDAQ, the natural gas really finds some indecision, lower volume, perhaps seeking data, which you may have to wait until Thursday to find out from the EIA. As far as things that have happened today in the news, kind of a slow news day, it looks like. The thing that sticks out here, Tesla up 10% today after Credit Suisse upgraded its expectations. I guess Joe Rogan has apologized to Spotify and the musicians amid the boycott over his podcast. I don't know what that's going to do. Sony's going to buy the video game maker Bungle in a $3.6 billion deal, as apparently there's a consolidation going on in the gaming industry, something I'm really unfamiliar with. And we've put up what looks like another late spike in our equities here this afternoon. It's going to be another fun day tomorrow. PD, good afternoon. I know you having markets go one direction has always been challenging for me. Anytime there's a trend that's already underway, I find myself having a very difficult time finding a way into it. So you are certainly not alone there. But anyways, make sure that you hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome. We got a kind of a slow day here on the recap. And see what things look like on the charts. Now, this morning we talked about a couple of things that we were going to be keeping an eye on throughout the trading day today. One of them was the late spike in the ES. Obviously, we know how that has played out. We have the a value area special situation play in the nat gas, which wasn't truly a value area special situation play the way I'm looking at it on the charts now. We were also going to be watching gold for any opportunities, of course. And one of the things we should have been looking for is that opportunity in the euro, but that came as a bit of a surprise. We just got too short in the hole, it looks like. Good afternoon, Spencer and Bill. Good to see you. We're just about to head into the charts. If you are new to the forecast or the market recap, thanks for joining us. Hopefully you're going to find some good information. Wonderful, I think, session today in Top Step Trading Foundations and also in the group coaching. We got more questions than I could answer in the group coaching. We've been doing it a half an hour later because of foundations, and it was a little bit late again today, and I do apologize for that. But foundations will be over the end of this week. This week we still have, tomorrow is the intro to market profile. Hopefully you'll be stopping by to learn a little bit about that if you're not already in the know with the market profiles. And then Wednesday and Thursday, we're going to be talking about a business plan. What should be in your business plan? Your trading plan. What should be in your trading plan? How are you going to put context over the marketplace, and put hypotheses as to what you think the market may do. These are really good ones, and hopefully you're going to be able to attend. But of course, you will be able to watch them in the recordings on YouTube. Yeah, it is hard to catch those. You always feel like by the time you get the opportunity to buy it, you feel like the opportunity is gone and you're going to end up paying the high. It's very difficult, but today was a very powerful move. The market opened, tested lower, rejected. Once we took out the high of that opening range, and once we took out the high of the basic loose high of the range that we were in all last week, I figured that game was on and we were heading to the upside. You don't have to catch all of it. When there are moves like that, be happy catching your bite out of the middle. Jerry is awake. Good to see you, Jerry. We're awake now. It was a good day, except Mouse was acting up, so I went to buy a new one. Oh, I hate that. And then if you're on a laptop, you're stuck using that trackpad, and those drive me crazy. I feel for you, Jerry. All right, so let's go ahead and jump into the charts and take a look at what we're seeing here. Let me get set up here. So we're going to start with, let's start with crude. Just go left to right. All right, so when we left crude, we were talking about the fact that the market was struggling its continuation to the upside. It did end up closing higher today, but no real big shakes, no big moves, unable to take out Friday or Thursday's high, really just staying range bound. We're going to call this day 3 of range. One of the things that we were talking about in the foundations today was these stochastics and the RSI. When we are looking at the market putting in higher highs over time, and the stochastic can't put in higher highs, as a matter of fact, it's putting in lower highs, that can be a divergence, and we're suggesting that the upside momentum seems to be falling off. We don't know how long that's going to happen. We don't know when it's going to change. It's just a bit of a warning sign now. We do have a little bit of an uptick here in our stochastic, so we've got a little bit less of a divergence, but still a divergence nonetheless. We'll watch last week's high for potential breakout from balance, similar to what we did in the S&Ps. We're going to be watching that in the crude oil. EIA comes out Wednesday, API tomorrow afternoon for new information that could change things. Here's what we were kind of looking at this morning. We were kind of Getting my notes back here. We were saying the upside performance was not that great. We lost open interest on Friday. Volume maintaining overall. Market just needs new upside participants to continue. Was it able to find them today? Not really. I mean, the market opened in range. We suggested trying to stay very patient this morning because the best trade location when we open in value often comes later on in the session, which it did. Here's our 3-day low. Okay, here's our balanced low. The market took a look down there, was unable to continue, did not attract sellers. Buyers came in and pushed the market right back to basically point of control, that comfy, gooey middle where a lot of trading occurred on Friday. Two-sided trade occurred easily there. The market returned back to the area where two-sided trade occurred easily. What's it mean for us tomorrow? Well, got to see how the market opens again tomorrow. If we open with a gap, maybe that's an opportunity for us to break out the upside. If we open, it'd be kind of a stretch to open lower, but if that's the case, then we'll have to deal with that then. But again, if we open in range, in the middle, then we've got a bit of almost a double distribution or even a triple distribution today. We open in the middle here, inside value between these two high volume nodes. We're going to look to check those high volume nodes before moving away from this area. And for even the S&Ps, as the stomach or the market, if you will, turns. We had downside momentum largely broken, right? We had a late spike. We were going to be opening in that late spike. The 200 session moving average on the continuation chart was certainly going to be in our way. Hang on a second here. There it is. Okay, that 200 session moving average, 44.42.91 by the end of the close today. Was no match for our buyers today. Here's the 30-minute chart. Here's the late spike. I'm going to make this big. Here's our late spike from Friday. The market opening in the late spike, taking a look to the downside. The open test to the downside failed. Once we took out the high of that opening range, the game was onto the upside. We pushed up above last week's high, the upper extreme of the range that we've been in for all of last week. The market kind of hung out there a little bit. We found support at that level, and now we've put in yet another late spike for us today. Smaller late spike, but still a late spike. So we're going to have to see how this market opens up tomorrow. I love the late spike. It's such a good opportunity. NASDAQ, similar situation. We got a little help from Tesla and Credit Suisse today. So that's always good. We'll take that whenever we can get it. Downside momentum we talked about this morning was off for now. Late spike, open in the late spike, we go higher. It's not a definite, it's just a higher probability. Here's the volume profile. So the market opened with a gap, closed the gap on that attempt to push the market lower. Buyers weren't having it. Off to the races we go. We're back up here at last week's high and with another late spike to the upside. So it's going to be another fun one tomorrow. And I'm excited. I always love those. As far as gold is concerned, a lot of disillusioned longs as we lost 14,000 on Friday. It's in a messy area. I was looking at this saying, I don't see that there's any wonderful, great opportunities here. The market really just seems to be kind of licking its wounds off of a continuation attempt last week or the week before above this inflection level, and the market really just kind of stuttering, falling back down below it on Wednesday, Thursday, Friday, all down days. After the roll, of course, we just rolled Wednesday or Thursday to the April contract. That should be expiring relatively soon, at least no longer a part of the volume and open interest so much. We really just had an open drive and acceptance of that drive. We opened in range, but above value. We're pushing value higher again. Very little opportunity. Once this push to the upside was accomplished, there was very little to do the rest of the day. There was just rotation, kind of a smaller range in that rotation. It was not a very fruitful trading day. And for the euro, wow, this was a bit of a surprise for us. We know that we're at last week's low. We've got weekly kickoff low down here at 0874, because there was some pretty decent momentum to the downside. We had good volume on Thursday, an addition of open interest. Thursday. On Friday, we took off most of that open interest. We lost 7,100. So a lot of that cheer and momentum got sucked away from us on Friday. We had a huge gap, if you remember, from Wednesday to Friday's high. And that gap was what really provided our opportunity. Take a look at the 30-minute chart. We were opening in range and in value, suggesting, hey, let's be calm and cool and collected, and see if we can't find better trade location as the day goes on. Well, it wasn't very long. We were finding acceptance in this gap from last week, and look where the market really drove to. I mean, not almost a straight shot, but directly to close that gap from, what was it, Wednesday to Thursday to Friday. Yeah, Wednesday to Thursday, this huge gap just got rechecked and covered for us today. That gap close, is it going to mean that we've kind of rechecked all the participation that didn't occur here? Did we take care of all that and we're going to head lower now? I think the high of the session from today, the gap close from Wednesday, is going to be somewhat of a pivotal day for us moving forward into the rest of the week. 10-year. Here's the daily on the 10-year. We talked about the fact that the market was really centrally located between weekly kickoff high and weekly kickoff low. Our balance high and balance low this morning. We were talking about the fact that it's again centrally located. Didn't see a lot of big opportunity in this today. I don't think we really saw that much. That's the nat gas. Here's the 10-year. Basically, the market just tested both extremes of value. It seems to be kind of a bit of a bid here after the close. But if we looked at opening in range and in value, we've found opportunity here early. If we looked for opportunity up here later, at least we had a decent pullback or an opportunity to profit, but there wasn't that much of a range. So if we can't really define very cheap risk on these trades, do we even think about trading on a day like today in the 10-year? Let's go back to the same panel there, nat gas. A lot of people were kind of talking about nat gas in the forecast this morning. Is this going to be a head fake, or what's going to happen? Well, not much. Not much happened. We we um, we added 9,000 in open interest on this push to the upside on Monday. Decent volume, rollover largely going to be over here. The market was testing that weekly kickoff high even before the open here. 50 oh $5.08, almost $5.09 is the weekly kickoff high. Based off this swing high back here, a lot of folks got long up here and really got burned because a lot of speculation is as we're coming into winter and a lot of folks thinking that we're going to have a hard time with supply. And here in the U.S., I think we're okay. Europe's another story. Let's take a look here at the 30-minute chart. And for some reason, I thought we were looking at a value area special situation in that gas, but looks like we opened in range. So that kind of takes some of that away. We did, however, rotate relatively close to value low before finding buyers and then kind of closing higher on the session, moving value higher, no risk of retesting this gap that we left Thursday into Friday. That's still going to be out there waiting for us if we do end up pushing this market lower. So lots more going on this week. Don't forget, we also have the a lot of employment information due out for us this week. Again, as a reminder, tomorrow, ISM Manufacturing Index at 9 o'clock. That's probably the biggest one tomorrow. Construction spending, job openings and labor turnovers survey at 9 o'clock, and 8:45 the PMI manufacturing final. We don't see any talking feds here for the rest of the week. ADP employment on Wednesday, jobless claims on Thursday, and the unemployment numbers due out 7:30 on Friday. So we'll be waiting for some more of that bigger information as the week goes on. Right. Well, I'm going to see what's going on here. This day in history, 1971, Apollo 14 departs for the moon. (1990) the first McDonald's opens in the Soviet Union. And a really important day, 1865, the House passes the 13th Amendment, which abolishes slavery in America. Huge day. As far as what happened in music, I don't really see any. 1951. No, that's not anybody. 1956, Johnny Rotten was born today. 1981, Justin Timberlake was born today. A lot of Justin Timberlake fans out there. 1969, Led Zeppelin played the first, I like this, played the first of two nights at the Fillmore East in New York during the band's first North American tour. Porter's Popular Preachers opened the night, then Led Zeppelin took the stage. It's alleged that Led Zeppelin's show was so powerful that and got such an enthusiastic audience that the headliners, Iron Butterfly, refused to follow them. That's playing some music. 1976, ABBA knocks Bohemian Rhapsody by Queen off the UK number one with Mamma Mia. Huge. All right, that's going to be about enough. I am going to let everybody get back down to work. Do your homework tonight. Make sure you review your journal, all the things that are helping you find consistency. And I will see you tomorrow morning on the market forecast. We got a lot of things going on. It's going to be fascinating to see how these markets respond overnight and what we look at tomorrow. Dan says hello to everybody. He's going to be off the forecast for a little while. He's working on a special project, and I'm hoping it's something special for you guys. All right, so we will be Jim Cramer started his Mad Money tour in Philly in 2028. He hasn't started yet. Maybe 1998? Oh, we'll figure that out. All right. All right, folks. Get a good night's sleep. Rest up. Be ready for tomorrow. We had 4 more days this week with which to find our opportunities, and we're going to find them. Remember, we're fishermen. We're going to find fish. See you tomorrow morning, 7:30 or 7:45 for the market recap. Till then, be good to each other. Be good to yourselves. Get some rest. See you then.